Good afternoon, everyone, or good evening or good morning, depending on where you're coming from. Welcome to one of the deep dive sessions, the whale, and we're full of metaphors and similes today. As you would notice from the title, it says Charismatic Megafauna, and we're talking about blue bonds, by the way. Nothing, don't get waylaid by the title itself. But briefly, while I pause on the title, a charismatic megafauna, basically what it's alluding to is something that's big and popular, as the word mega indicates. And in this case, the whale seems to evoke that about oceans and the ecosystem surrounding the oceans. And that's what we're trying to answer today with the help of our panelists, whether or not blue bonds are that megafauna in the ocean finance ecosystem. Another analogy I usually use, and this has come up quite a bit with friends and family, is for those of you who followed the Jurassic Park movie series, the T-Rex is always the hero, right? So always you come up with T-Rex, but that gives you the evocative idea of all the other dinosaur families, which we are very hard pressed to pronounce, whereas T-Rex is easy to pronounce, comes up in the mind. So similarly there, we need to find out what this blue bonds is all about. Why is it getting more mileage and coverage in the news? And hopefully we'll answer some of that today with our brilliant panelists. But before we do that, it'll be great to see who we have in the audience. So we've put up a poll here just to get a sense of where you're joining from. And you should see that in a bit. And also be interesting because there has been some developments in the blue space in different parts of the world. So it'll be good to see who in the audience is coming from where and what your experiences have been, depending on the developments in that area. So hopefully you're seeing some of the poll stats coming up. Seems evenly balanced between Pacific and South Asia, which is good to see and know, given I know at least both those regions have been active in this space, so it'll be good to draw on examples which we'll come to during the session. Give it a few more seconds to see where it lands. As expected, Southeast Asia, given where the session is being held or hosted from. Great. What we'll also do as a next quick poll is just to get also a sense of what kind of organization you're representing so that we can get an idea of the kind of interests you'll have, which we'll hope to cover in the session. That should come up in a second. Interesting. Good. So good mix of private sector as well, NGOs, government, no surprises there. Excellent. So that gives us and our panelists an idea of who we're talking to. In this virtual world, it's always good to get a sense of that because we can't see all of you. So thank you for participating in the poll. So just to set the stage, I'll just give you an overview of what we're covering today. We have a combination of speakers and some videos as well, because there's been quite a lot surprisingly happening and satisfyingly happening in the blue finance space. So we'll give you a mixture of those so you get both the context and also recent developments of what's happening and what's to come as well. So that's great. Few pointers, I guess, in terms of I work with the ADB's ACGF, the ASEAN Green Catalytic Green Finance Facility. So we've been doing a lot on thematic bonds. So one of the first questions I think of is that, okay, we've come from green bonds to social bond and sustainable bonds. What is this blue bonds all about? How is it different from green bonds? And why specifically blue? Why are we deep diving into that specific sector when the others are more related to environment as a whole? For example, transport, infrastructure, all come under green. But why this one? And what exactly are we trying to achieve? And with the help of my panelists, Susan and Suzanne, who will introduce shortly, we would like to cover that. But before we do that, as a context setting, I'll just get a video kicked off on ADB's Blue Finance and Blue Bonds video, which will set the tone for all of us in terms of the broader framework, and then we'll come back. Be with you in a second.
Good morning. I'm joining you today from the center of global marine biodiversity, the Asia-Pacific region. I'm surrounded by the ocean, which is teeming with seafood and feeds the world. The mangroves, the seaweeds that absorb carbon emissions, and the most biodiverse coral reefs on Earth. Sadly, this region is also the global epicenter for marine plastic pollution, agricultural runoff, coastal sewage, and overharvesting of marine fisheries. And this is the very reason why acting now to protect ocean health in Asia Pacific is truly essential. As we know, the global economy would not exist without the ocean. Ocean-based industries contribute to hundreds of millions of jobs in fishing, shipping, marine tourism, and renewable energy. The estimated total value of ocean's assets is $24 trillion US, whilst the global ocean economy is valued at $3 trillion US per year. Yet, the funding gap to support healthy oceans is getting wider every year. The scale of the problem requires a leap from smaller transactions to transformative market deals. And this is why the Asian Development Bank is leading the way in developing blue bonds to grow the blue economy. Innovative finance products like blue bonds are important to diversify and expand the investor base and package smaller projects into a bundle that is bankable. I'm pleased to share that in September 2021, we issued ADB's first blue bonds worth $300 million US. The dual tranche blue bonds were issued in Australian and New Zealand dollars and purchased by institutional investors in Japan. The proceeds will be used to expand our investments in sustainable fisheries, to implement circular economies, and to boost marine renewable energy, green port, and shipping projects. An example of what may be financed by the bond is the Greater Malay waste-to-energy project in Maldives, which will reduce greenhouse gas emissions and stem the flow of plastics and other wastes into the ocean. The blue bond was intentionally designed to be replicable. And ADB is now entering a new phase of this work by piloting a blue bond incubator, which will support both sovereign and corporate blue bonds. We are seeking partners to work together with ADB on this journey. Our blue bond program is part of ADB's action plan for healthy oceans and sustainable blue economies, with a financial commitment of leveraging up till $5 billion by 2024. Ocean finance, like the ocean itself, is largely uncharted. There is an urgent need to put it on the map before it's too late to turn back the tide of damage to our global marine environment. To close, I'd like to thank you for your blue interest and blue actions.
So that we just heard from Ingrid Van Rees of ADB. And I think that probably gives you a sense of the why, the sense of urgency and what's needed to be done. And the original question I asked, but why blue? So that's partly answered. But I think let's deep dive further, and with the help of our panelists, what I'd like to do is introduce you to our panelist, Susan Roxas from WWF's Coral Triangle Program, who's heading up fisheries and finance, and Suzanne Johnson from UN Global Compact and the Sustainable Oceans business. So what I'll do is, and the other thing I wanted to mention, you saw how much of development has happened in terms of incubating the bond and actually bringing together partners. I would also recommend that in one of the other sessions today, or I think tomorrow, the Fijian government would announce the intention for launching a blue bond in COP in Glasgow. They'll be talking about that. So definitely do tune into that when you can, because that'll give you an idea of how far this has developed over the last few years. I was actually at COP21 when Fiji issued its first sovereign bond. So it's great to see that evolution, and that's indicative of what's exactly happening, and it's actually going into the blue space now. So that's great to see coming from a smaller island economy, and it shows where we are. So without further ado, I'll turn to Susan Roxas. Susan, pleasure to have you here. And we know that there's a lot of food in the Philippines in the fishery space, which you've been looking at. and also looking at financing options, including a blue bond. So it'll be great to hear from you from a practical perspective, why, as per our original question, and what can we expect next on that space. Over to you, Susan. I think you're on mute.
Thanks to the ADB for having me on this very important panel. So first of all, why a bond? So a bond as a debt instrument was part of a blended finance approach that we were taking for the projects in the Philippines. So if you look at the trajectory of financing fisheries, you first formulate sound policies, establish enabling conditions, and this was the subject of the session before this. Establish enabling conditions for sustainable fisheries management. So once in place, then you enter the phase of value creation and can generate returns to an investment. So the policy formation enabling conditions have begun to de-risk the fishery for the investments. So the project we're working on in Lagonoy Gulf and the Mindoro Straits, about 6,000 yellowfin tuna handline fishers across 21 municipalities. Policy formulation, foundations for fisheries governance was done over about 8 to 10 years in a collaborative effort with the Bureau of Fisheries in the Philippines, the local governments, the civil society groups, and of course the fishers. This was supported by grants from the German government and large retailers from the UK. So the fisheries have achieved, by the way, MSC certification, the first in the country. And this expands and solidifies demand markets in the EU, the US, and Japan, our largest export markets. So there were lucrative supply chains that in this the fisheries improvement projects, and we needed to make sure that there is equitable distribution of the value generated. So the sequencing of the development roadmap was essential for a bond to start making sense, right? So another reason is bonds support an integrated ecosystems approach to development and can address systemic threats to the fishery. For instance, investments in aquaculture in the area will ease pressure on capture fisheries. However, you need alternative feeds production to avoid using fish meal that add immense pressure to the marine ecosystem. So simultaneously, you invest in strengthening the sector in interlinkages to stimulate a local economy. So the indicator for a successful outcome would not just be an increase in fishers' household incomes, but incomes of households in other sectors, food stalls, ecotourism revenues, renewable energy, plastics recycling, etc. And then finally, the challenge we wanted to address in 2017 when we started to talk about blue bonds was not just support the value creation phase of the yellowfin tuna fisheries, but to address the high juvenile catch tuna catches, a serious systemic risk to tuna stocks in the region. So yellowfin, very quickly, yellowfin tuna juveniles are usually caught by purse seine commercial fishers as incidental bycatch as they fish for skipjack. While small-scale handliners usually catch the adult yellowfin. So measures to curtail juvenile catches, such as pads management, longer closures, and implementing what BFAR calls the tuna conservation zones, or no-net zones, as they call it, because the areas are close to purse seiners at certain seasons. Only handline gear is allowed, but there is a trade-off here. So as commercial purse seiners will suffer revenue losses from the reduced catches. So we needed a win-win solution and considered compensating the purse seine owners for losses, at the same time incentivizing them to proactively reduce juvenile tuna catch with blue bonds. So linking the value of the bond to profitability of the adult tuna harvests and trade, which would grow due to healthier tuna stocks because of higher spawning biomass with less juvenile tuna catch, right? Or more tuna left to mature. So, the bond was very versatile in that sense. So very quickly, what's coming up next, there's a lot coming up next, right? So this phase of the project is being supported by the Switch Asia, and it's leveraging the incredible work that's already been done in the area. And we will be conducting area assessment of the sites, right? Measuring community net worth, baselining the role of fisheries in the local economies. We're starting with the two municipalities in Mindoro, Sablayan, and Mamburao, and to understand the roots of poverty of the fishers in the area. And then we will establish a portfolio of bankable projects to take to market. So there are low-hanging fruits such as cold chain, cold storage facilities, post-harvest facilities, processing, etc. To maintain some of the value. We want to make sure we can maintain some of the value within the communities, right? To kick off a multiplier effect. So some interventions are investment ready and can be scaled. Others we need to prepare for incubation. But all should scale deep. So that analysis, initial analysis, is very important. You know, how do these interventions help communities, and will scale deep into the local economy? We also need to rationalize these interventions. You know, do we set up invest in a feed mill for 500 tons of insects a month, for example, or do we aggregate it at provincial level, for example? And then a lot of these interventions have been identified for investment in the BFAR national plan. So they have a comprehensive national fisheries industry development plan, the national tuna management plan, the octopus plan, the marketing. And so all these plans have identified these interventions needed. So it's really aligning with BFAR, working with them, supporting them, and to make sure that complementary investments come in, hopefully through a blue bond. So, and then we will see the structuring and appropriate investment mechanisms. You know, can we structure a sovereign bond? Is it municipal or national? Should we look at fishery management area level bonds, for example? So how will this create an ecosystem for other financial products, impact funds, parametric insurance, blue carbon mechanisms, etc.? So, you know, different instruments to the relevant needs in an ecosystem, right, of which communities are a part. So there, the project will try, of course, to meet eligibility criteria once out for the blue bond incubator that the ADB is launching. So it needs collaboration with the government agencies, of course, BFAR, DTI, DNR, and the Department of Finance, and very critically, the local governments. So a lot happening. It's going to be difficult, but I think this is the way to move forward. Thanks.
Thank you so much, Suzanne, for sharing that. You're right. There's a lot to unpack there, and thanks for sharing both the top down and bottom up. So what I read from your perspective there is that there's the whole enabling environment and the plans the government needs to put together to make this work. But equally, it's quite specific, right, in terms of fisheries and the value chain for fisheries, which many investors are probably new to in terms of, you know, the fish feed and the social aspects of it and the community aspect of it, which makes it quite interesting and multifaceted. On that note, actually, one of the next videos which we'll share shortly is the Nature Conservancy and the now quite well mentioned and well documented experience of Seychelles and others that have happened since then, which will draw out some of the points you've made, Susan. So maybe we can go to that video and we can see how that's actually happened. So we've talked about the why and the what. So this will be an example of the how. And again, we can draw on that and come back to the panel so we can all talk about that together. So maybe we can kick off that video, the TNC video now, so the audience can have a view of that.
Hi, I'm Melissa Garvey, the Nature Conservancy's Global Director of Ocean Protection, and I'm thrilled to have the opportunity to discuss the Nature Conservancy's ocean conservation finance efforts. Now, what we found is that the single largest barrier to ocean protection, it's funding. Island and coastal countries, they want to protect their precious marine resources, but financing holds them back. But there's hope. The Nature Conservancy's Blue Finance, or what we call our Blue Bonds strategy, it's one solution. And the idea behind our strategy is quite simple. In support of a country's commitment to protect about 30% of its ocean, the Nature Conservancy restructures the nation's sovereign debt. And that can lead to lower interest rates and longer repayment periods. The government then is able to use the savings to capitalize a trust fund to support new marine protected areas to which the country has committed. The role that the Nature Conservancy has is we assemble the deals, we facilitate a stakeholder-driven marine spatial planning process to design that system of protected areas, and then we create a conservation trust fund that holds the government accountable to its commitments. Now, I'm showing you a flowchart of how we restructure debt to support marine conservation. And it's a little more complicated than this, but quite simply, the Nature Conservancy creates a subsidiary that sources funds to buy debt from a country's existing creditors. We then negotiate the conservation terms, And we work with a DFI to de-risk the project, and that allows us to have lower interest rates and longer repayment periods. The country is then able to make payments on its debt and have a portion of funds go to support conservation. Importantly, we know that this works. In 2016, TNC set up a deal to restructure $20 million of debt in Seychelles. And in 2020, Seychelles designated new protected areas that increased protection from what was less than 1% of its territory to a full 30% protection. And that's an area larger than Germany. Our latest project was in Belize, and it closed in November. It's the world's largest debt restructuring for marine conservation. And we all know that Belize has a small geographic footprint, but Belize has a really high ecological value in the world. And Belize's economy is deeply tied to its nature. Tourism, and most of that being nature-based tourism, it's one of the largest sectors of Belize's economy. Funding marine conservation and climate change adaptation activities, however, still remains a difficult task for while its debt is more than 25% of its GDP. So what we did is we used a standard debt restructuring model. So in support of commitments to protect 30% of its ocean and use marine spatial planning, TNC restructured $553 million of Belize's debt and generated $180 million in support of marine conservation over 20 years. Now, beyond Belize, there's many places where this debt restructuring strategy can be effective. And we have a full pipeline of projects underway across the globe. We estimate that we can durably protect 4 million square kilometers of ocean and drive $1.6 billion into sustainable finance for oceans with this approach. Finally, I want to share some lessons learned. So since we started working on these projects in Seychelles in 2016, we realized a couple of key things. First, we're negotiating with national governments. These aren't just deals. So it's important to be investing in capacity at the local, regional, and global levels to build the political support for these projects. Next, to ensure that conservation goals are achieved, we're investing in significant facilitation at the earliest stages of the planning. Next, we're also in the process of developing the world's first global MPA costing framework. And this framework can be stepped down to the country level to better understand the costs of new marine protection, as well as the long-term benefits. And that allows us to choose and negotiate the appropriate financial mechanisms to finance conservation objectives. We've also developed new financial mechanisms to be more responsive to government needs. So in addition to the debt restructuring that we did in Belize, we're now working on new debt issuances and combinations of new debt and debt restructuring. Last but not least, we're also adaptively managing our pipeline so that we can be nimble in the face of uncertainty. So we look forward to applying these lessons learned and working with partners to fundamentally change how the world finances ocean conservation. Thank you.
Great. Some very big numbers in there in terms of, and I spotted the word super bond in there, in keeping with our megafauna analogy. But the one thing which came out from that, Sujana, I'll turn to you, Suzanne, quickly, is that there's a lot dependent on the government or public sector here, because things like tourism or marine protected areas are in the realms of what the government and the public institutions can do. And from experience with the green bonds as well, even before it was a thing, right? It took IFC and others to start the market, but it only gets mainstream or becomes bigger when the private sector also comes in. So Suzanne, maybe I can turn to you to understand how UN Global Compact is working with the private sector and what's happening, and how do we get corporate bonds into this place and they can have their blue finance contributions as well. So over to you.
Thank you. Thank you, Karthik. Hello, everybody. And thanks to ADB. Yes, I mean, even going back to what Ingrid pointed out at the beginning of this, which is there's a huge gap in ocean funding. And I think the viewers all know that SDG 14 is the least funded SDG. But it gets a little bit more interesting as we think about the corporate angle, because if the UN estimates that the SDG 14 needs $170 billion of funding annually, currently of that 175, only 25 billion is being spent. Okay, so that's a huge gap. But of that 25 billion, only 8% of that is coming from the private market. And that's much less than any of the other SDG goals. So it shows there's a burning platform for some corporate and private sector action. And so this is a great entry point for corporate blue bonds, which are an emerging asset class. And we believe, to your point, that blue bonds are where green bonds were 10 years ago. They can be a great tool for companies to shift private sector capital towards sustainable ocean use at scale. And that's what we're talking about, the whale. So at the Global Compact, we collaborate with ocean industry and also with the finance value chain to develop frameworks to attract funding for sustainable ocean business activity. And one thing that we've done to help issuers and markets think about a corporate blue bond opportunity is we've produced a blue bond framework, which a company can use when it wants to signal and fund its sustainable engagement in and around the ocean. And just to describe this framework a little bit, there's kind of three main parts of it. First is, because it's an emerging asset class, we think it's important to align with already recognized frameworks. So we refer to the ICMA's sustainable bond principles as the reference guidelines to follow. That's one thing. So in this, blue bonds can be a subset of green, they can be a subset of social, and they can be a subset of sustainability linked bonds. And I'll talk a little bit later about why they can be all three. But the next thing is, in addition to aligning with recognized frameworks, we also think that issuers need to publicly align their corporate strategy with best practices in ocean sustainability. And here, the Global Compact has written a set of sustainable ocean principles along with 350 other stakeholders, and those can help align corporate sectors with best practices around the ocean. And then finally, in terms of this blue bond framework, once an issuer decides how it's going to use this blue funding and what is the blue criteria it's meeting, then it's really important to get a second party opinion to reassure investors that what they're investing in actually meets their sustainability requirements. So those are, this is not that different than green bonds in terms of the process, but with a wider focus. And so we also see, I want to point out another chunk about the market and relevance right now is that we're seeing that investor money is there and it wants to work with blue issuers. So, in general, we all know ESG sustainable investment is growing fast, but as it turns out, there's interest in the ocean specifically. And Credit Suisse did a survey that showed, almost 3/4 of investors viewed sustainable ocean economy as currently investable. And also, this is important, the majority of investors viewed ocean-related opportunity as one of the big investment themes by 2030. So the investors are there, but investors need properly structured investments and vehicles. So they need issues of the right size to invest in, they need good liquidity in the secondary market, and they need a good return. So those are some of the issues that, this emerging market of blue bonds needs to grapple with. But since we're with the Asian Development Bank today, I want to say that one of these ways that we can break through and get this market going is working with the multilateral development banks, and they have a critical role to play in scaling up the corporate market. Because ADB and other multilateral banks, they create the market signals, they support the building block issuances, and they help address investors' needs for appropriately structured investment. Another thing they can do, though, is, if you think about specialized sectors of finance, then another specialized sector of ocean industry, and then the other one of ocean science, organizations like the ADB can bring those three bits together, and that helps to focus the attention on the blue and look at the possibility there. we actually, and Ingrid mentioned this, are very excited to work with the ADB and collaborate on the development of their Blue Bond incubator, particularly on the corporate side and looking at the APAC region. You know, I think through this incubator, it can do another thing that is going to help scale up the market, which is we need to increase the market recognition around the vital role of the ocean. And this means, you know, not just working with ocean industry companies, but also arranger banks so that they can show good deals to issuers and understand the ocean, and rating agencies too, so that they can incorporate blue into the ratings. But you talked about why do we need something that's blue, not just green, for example. And, you know, the ocean and the ocean climate nexus is important in addressing climate action. We do know that. So this green bit, over 20% of the GHG emission reductions that needs to happen to get us to Paris is going to happen in the ocean. But there's a whole range of issues that ocean industry can address in the suite of the SDGs and through ocean finance. I mean, if you think about better labor conditions and reducing waste and gender equality. And so this broad nature of ocean solutions doesn't always fall neatly into a green bond or a social bond, but rather sometimes it covers a whole suite of issues. And so there's this unique nature of what ocean finance can do, and hence the one of the reasons why we're looking at the label blue. And then let me just mention one last bit of what needs to be done in our view to get this market going again. And that's really around building standards. And we need, you know, there are standards, but we need to start developing them more around the ocean and ocean industry. And we need to be coalescing around globally recognized standards. That's important because we've got bits and pieces around the world, and we need to start looking at them globally. And then also, you know, investors and companies need to demonstrate impact, and that's going to take data around ocean industry, and it's also going to take developing ocean criteria and KPIs further. But that's all happening. So there's a lot of pieces in the works, but there's a lot to focus on, a lot of actions we can take. That's all for now.
Thank you, Susan. Thank you so much. That is quite comprehensive, and I'm glad you brought in the different strands of standards and the work that MDBs can do. In the last few years in the ACGF and working with many issuers, that has come out front and center, especially on the best practices side, because that's how you create the market and bring that focus and attention. And I think that you very aptly answered the question on the why, is that if you don't get that focus on why blue, and even if later on it's a subset of sustainable, that's fine, but you need that initial injection of clear focus so that there's targeted investment coming in. And very satisfying to know that the investor interest is there. A great survey, as you said. So it'll be great how we can pull those strands together as we discuss here, and obviously outside of this, and hopefully the audiences and their institutions can play a big role in this, including academia and banks, as you said. On the frameworks point, I wanted to turn to Susan, and both of you can jump in on that point. Susan, you mentioned about the bond for the Coral Triangle in Philippines. The Philippines has come up with their own sustainable framework. So how does this fit into that? And taking Suzanne's point earlier of either it can be a subset or it can be separate, how does it lend itself to that? And more importantly, how do we make sure that the focus is not lost if we were to go down that way and create that blue universe, which is very clear for the investors as investable opportunity? Over to you, Susan.
I think Suzanne made really important points that we need a standard, we need a global standard, and especially in this region, we need those robust guidelines, right? In how are we investing in blue? But one of the issues as well is, and I know that the ADB guidelines approach is multi-sectoral. we cannot approach oceans unless it's from a systems perspective, right? It's really difficult to start to, multi-sectoral is important because it does represent different parts of that system. So it's definitely not just doable, I think, with great difficulty though. I mean, we don't have a lot of examples. This is very new space, right? However, very necessary. So, you know, we need the audits, we need those guidelines, we need the expertise to conduct these audits because it will be interdisciplinary and transaction costs may be quite high. So the Philippine Sustainable Finance Framework, the focus is on nature-based solutions. You know, it underpins the strategies for sustainable financing. So this is really essential criteria and the fact that with the ADB as well as with the Philippines ecosystems approach is central. So very much aligned in the way we're trying, we as WWF, Coral Triangle, is trying to approach these issues, that it is a systemic approach, but how we implement it, how we enforce the policies, and how we track successes is crucial. It needs, for example, you can't say, okay, well, you know, aquaculture production has increased by X%, right? Or we produced X metric tons of milkfish over last year. You know, that those are not the indicators we want to see. We could have met those goals, which is very sectoral goals. However, what was the impact on the system? So guidelines and safeguards should be in place for that kind of a framework, the systems framework. So I think that's really important going forward. It's a new space that has to be developed as yet. It's a good start.
Great, thank you. Now, I agree. So it'll be interesting to see how that plays out in terms of the multi-sector versus making sure the blue is not diluted. And to the earlier point on MDBs as well. So I know obviously the ADB's Ocean Finance Framework is exactly trying to do that in terms of creating that space for the blue thing. Similarly, there's a Blue Sea Finance Hub that ADB is creating in Indonesia, so that there's a hub specifically so that it stands out from the green to support and to encourage more of the green pipeline. Some of that is covered in other sessions. What I would do then is that, going back to a corporate point, maybe just pause for a video again. This is the Bank of Qingdao, who's looking at coming up with the blue finance ecosystem within their own business. And the blue bond as well are in the plans, as I'm told. So if you can swap to that video, and then we'll come back again and talk a bit more on the corporate side as well. It'd be good to get how we have a pathway towards mainstreaming. So on to the Bank of Qingdao video, please.
尊敬的各位嘉宾、女士们、先生们，大家好！非常荣幸能够受邀参加亚洲开发银行组织召开的此次健康海洋技术与金融论坛，非常高兴能够借此机会和大家分享青岛银行在蓝色金融领域的探索和实践。青岛银行成立于1996年11月，2015年12月3日在香港联交所上市，2019年1月16日在深圳证券所上市。是山东省首家上市的法人银行，全国第2家 A+H 上市从商行。山东省是海洋经济大省，青岛市是著名的海洋城市。青岛银行具有发展蓝色金融的得天独厚的优势。2020年7月起，青岛银行与世界银行集团成员股、国际金融公司、RFC、亚洲开发银行等国际机构共同合作，筹备发行中国首支私营部门蓝色债券。目前，我们已经完成以下几项主要工作：一、制定并完善蓝色资产的分类标准，基于联合国可持续发展目标、国际资本市场协会绿色债券原则、国际金融公司的蓝色金融指引和开行的海洋融资框架，并结合山东省的 地域特色，青岛银行制定了蓝色资产分类标准，该标准为蓝色信贷、蓝色债券和蓝色投资等蓝色金融业务提供指导，鼓励并促进全球蓝色金融的增长。二、积极筹备蓝色债券发行。目前，青岛银行在积极筹备中国首支私营部门发行的蓝色债券。我们制定了青岛银行蓝色债券框架，明确了蓝色债券的发行机制。三、探索蓝色金融业务实践。2021年初，我们制定了青岛银行蓝色金融业务推广方案，在全行推动蓝色金融发展。通过实地走访、调研目标客户，我们已经初步完成蓝色资产的储备，完成新增蓝色资产投放40多亿元。四、建立环境与社会风险管理体系。根据投资者的要求，我们制定了青岛银行环境与社会风险管理体系建设方案，已经完成青岛银行蓝色债券环境与社会风险管理办法初稿，并经过多轮讨论修订，计划近期印发执行。五、持续探索深化国际合作。青岛银行在蓝色金融领域的探索和实践已经获得国际国内的广泛关注。2020年11月，受邀加入联合国环境署可持续蓝色经济金融倡议，签署并承诺可持续蓝色经济金融原则。青岛银行是新兴市场第一批加入的银行，也是全球第50家加入的机构。未来，我们也希望探索更多的国际合作，比如我们正在探讨和亚开行在蓝色金融领域进行主权贷款的方面的合作，争取更多长期低成本资金，以更好地支持蓝色经济发展。蓝色金融不仅具有商业可持续性，还具有社会的公益属性，非常需要社会各界的共同参与，尤其是国际发展机构的支持。青岛银行愿意探索和国际发展机构共同发起设立一支蓝色金融发展基金，支持蓝色金融或蓝色金融的某个子项目，如我们今天论坛中涉及的海洋带修复、海洋塑料污染治理或海洋中小企业发展等等。谢谢大家。
Great. So that's satisfying to know that on the private sector side, especially financial institutions, because they'll have a multi-sector approach, is looking at that in quite a big way with partners, which is also good to know. I see there's a question in the Q&A, but I'll encourage the audience to put in more questions, so we'll come back to that in a second. On the back of that, if I can ask Suzanne, in terms of your work with the private sector and corporates, what are you seeing in terms of examples of what they're trying to do? What are the kind of things they're trying to finance? And also any attendant challenges that they're facing? What are they looking at given the nascency of this movement?
Thank you. Well, I mean, first to say that the companies that we look at, work with, their CFOs consider themselves stewards of sustainable funding. And increasingly, we're seeing this, that CFOs are kind of the new champions in corporate sustainability. If you think about 17 trillion of corporate funding happens every year. in dollars. And a good bit of this is around ocean industry. So the CFOs and their finance teams are, really uniquely positioned to ensure that companies can be funded to align their strategies with the SDGs and meet the Paris Agreement and secure a healthy ocean. And where, which sectors are these coming from? A blue bond can be issued by a company operating in or by the ocean. You think about ports, shipping, infrastructure, tourism, sustainable tourism, fisheries, aquaculture, and offshore renewable energy. But also, a blue bond can be issued by a company that has an impact on the ocean. Think about manufacturing or consumer packaged goods that leads to waste, or agrochemical runoff, for example, that's harming the ocean. So blue bonds can stop harm from happening to the ocean, or they can also help fund ocean opportunities and take it in a positive direction. It's got these two aspects to it. We're seeing the private sector start to move on the blue bonds. And in the past couple of years, we've seen a number of corporate issuances that have been called green, but could have been called blue. Like a great example is Grieg Seafood, which is a Norwegian seafood company. It's a signatory of the UN Global Compact Sustainable Ocean Principles. It issued what they called a green bond to fund environmentally sustainable aquaculture in the ocean and securing their food in a more sustainable way. But I really like what their CFO said, that there's no contradiction between clean seas, healthy fish, and financial profits. And really that's the corporate sector, a good exemplar of the corporate sector view and within blue bonds. Icelandic Banki, issued green bonds recently as well, but they had significant blue KPIs in their framework. So again, that really is, that really is getting to a blue bond. But right now, we're seeing particular interest in the corporate world around ports and seafood and aquaculture and shipping and offshore renewables, particularly as it scales up. Some around sustainable tourism and a little bit around the circular economy. And another dynamic that I want to bring up, especially since we just had our speaker from the Bank of Qingdao, and this is a dynamic where we're seeing a suite of China issuances. Also, the China Bank issued a blue bond, which was aligned with ICMA principles. And the proceeds there, boosted the expansion of the sustainable ocean economy, including the scale up of offshore renewable energy and wastewater treatment. And this is being encouraged by the Chinese government policies on the blue economy. That has some impetus behind it. But at the moment, I believe Chinese institutions have now issued more blue bonds than institutions from any other market. This is going to continue because Asia is expected to be the dominant region in blue economy CapEx from the corporate side by 2050. So it's not going to be the end of this. So that's another dynamic that we're seeing as well. And great that ADB is focused on blue bonds. I mentioned, what are some of the things that can be done earlier and what corporates are thinking about. Talking about building a pipeline of deals, needing the liquidity that investors want, focusing on standards and criteria, the data there to measure progress. And another thing corporates are thinking about is kind of how they do a cost benefit analysis around a blue bond. Is it worth their while to put in the infrastructure to monitor what's happening to these proceeds? Where those companies already perhaps have issued a green bond, there's really very little else to do. But if they're looking at issuing a sustainability bond for the first time, then there is the monitoring angle in setting up that framework. But certainly, the CFO needs to think about what are the costs involved, but there are lots of benefits. And that certainly comes from signaling sustainability strategy and the attention in the market that we'll get to.
Apologies, I was on mute. I like the point about how the CFOs and CEOs are bringing the narrative deeper into the organization itself rather than something very niche. So thanks for sharing that perspective. I'm going to just have a look at this questions. There are a few in the chat, in the Q&A section. I don't know how much time we have, but at least let's try a couple of them. So let me pick one, and this might be something either of you, Susan or Suzanne, can answer. Or one of our ADB colleagues, given the blue bond work we're doing already. So is the Bank of Qingdao planned blue bond intending to raise funds from the private sector bond investors and to use those funds into making loans specifically to the blue industries, fisheries, seafood business, coastal tourism, etc.? Is there an ongoing monitoring on the issuing bank to ensure its proceeds are used in blue ways? That seemed to cover a lot of angles, which both of you have touched on. So I was wondering if one of you want to take that, probably Suzanne, given the private sector angle and what you just mentioned about frameworks and review, independent review. Oh, Melissa from our ADB team who's been working on blue bonds, if you want to take that.
Hi, everyone. Yeah, thanks very much. Truly good to see the video from our partners at the Bank of Qingdao. So the question, will they use those funds to make loans specifically to blue industries? Yes, that is the intention. They have designed a framework, a multi-sectorial framework, which defines which types of activities are in and out, what can qualify. And this includes many of those mentioned in the question: fishery, seafood, coastal tourism. Actually, I don't think coastal tourism is in there, but yes, there's several sectors that are identified. There's criteria around every single one of those sectors. And yes, there will have to be monitoring in place to ensure that the use of proceeds is used in the right way. Thank you.
Great, thanks for that, Melissa. And Melissa's worked very closely with many of the bond issuers and the framework, and reviewed a lot of frameworks which we worked on together. So thank you for jumping in, Melissa. The other question is quite an interesting one. I do think, although it's quite, I should say controversial, is on the Belize blue bond and the fact that it's a debt restructuring exercise. So I'll just read out the question as is so that the essence is not lost. In the Belize blue bond case that was referred to, was there not more of a sovereign debt restructuring where original investors lost money by selling out at 55 cents on a dollar? Was that not a moral hazard for the blue label? So I do think it's quite a good question. And obviously, I don't know if anybody can answer that at that level of detail, given Melissa's on the video and there were quite a few parties involved. But I just wanted to put that out there because I think that's the kind of question we should be asking to maintain the integrity of the blue label. Any thoughts on that? And I know there can't be an inclusive answer on that one, but just reflections would be great to hear. So I'll have a go on that because I do think it's a good question. Is that so? It's about, to a certain extent, damage reduction, because if it was left as is, there's a chance that there would have been further loss. So at least if any damage reduction is done and there's some benefit for in this case, the MPAs and the national conservation, there has been an out. I do agree that there's a certain level of loss the investor may have faced, the original investors. But it's sort of a damage reduction scenario, I guess, in many ways. And if it wasn't redirected to a green or a blue cause, what else could have happened? There would have been other kind of restructuring happening. So it's a question of the best to the worst, I guess, in many ways, to put it very bluntly. So that's just my personal take on that. But you're right, these are so case by case and so specific in terms of debt restructuring And in the past, the Paris Club and others and the London Club have been looking at restructuring debt. This has been going on for ages, right? Even before blue bonds or others came into the play. So the question is, how is the reduction in debt or interest payment being used to a good cause, while understanding that the original investors have lost money, but at least overall it's put towards a good cause. So hopefully that partly answers the question. I don't think there's a perfect answer to that, but open to any other reflections as well, if anybody wants to add on to that. And there is one other question. Sorry, Suzanne, please.
No, I was just going to say, I think the understanding is that there would probably need to be debt restructuring regardless. And so this was a good opportunity, but in the terms of moral hazard, meaning, it is, gosh, we'd like to see this happening. I mean, this is a particular structure that fit the purpose, but we'd like to see this happening in countries where a restructuring wasn't imminent as well, and we'd like to see that investment there too. So we wouldn't want just focus on negative situations, but they did a very good job at taking the pieces, identifying the need that was going to happen anyway, and the TNC putting a sustainable lens on that for sure.
Thank you, I agree. And I think with debt restructuring and more on the label itself, I think, as you said, Suzanne, it's early days. So we do need these kind of innovative mechanisms or structured mechanisms of blended finance. But as we said, the idea is that eventually the underlying use of proceeds speak for themselves, and we don't need the debt restructuring. The bankability of the revenue stream or the social benefit for fisheries, MPS is evident anyway, that becomes like a standard bond, because as I've always said with green bonds or green finance, the success of green finance is the day when the word green drops off, because all finance is green anyway. You don't have to qualify them as green or blue, right? So hopefully this is just a phase, and then the issue of moral hazard or the label integrity being maintained moves along with the mainstreaming of the ecosystem itself. So I know we are very short on time, and we have some minutes left to just recap. I guess we'll have to do that so that we don't just run to the wire. So firstly, I want to thank the audience for being participative in the polls and Q&As and really good questions. Sorry we haven't gone through all the questions in the interest of time, but thanks for having some provoking questions. And obviously thanks to Susan and Suzanne for bringing up some really rich perspectives in this session. Great inputs in terms of the enabling environment of what governments can do and what planning needs to go into place first. The importance of best practice and frameworks, and how we can get partnerships with these banks, academia, and other institutions and NGOs coming together, because we need all the help we can at this stage of the evolution. Right? So it can only work when all of these things come together, which we've seen and the ADB team has seen, and the role of MDB. So there is a lot to be done in terms of how this goes mainstream. And the MDBs do play a significant role in that, in creating the market and developing the market. So both in terms of ADB, as Melissa has done and now I'm doing, we will be continuing to do that. And you'll probably hear more about what we're doing in other sessions, so please do listen in. And not to dilute the fact that the governments themselves, so what Fiji is doing, as has been alluded to, we would like to see more of that. And thanks to the audience question on how we move towards bespoke structuring towards more mainstream, so this becomes almost the way of the green bonds, as you said, Suzanne, 10 years ago. So blue should follow the same, irrespective of what we call the label, right? At the end of the day, we're saying there's a whole industry in eco-ocean finance that needs to grow. And the numbers stated, as Ingrid said and others have said, and Credit Suisse report says that there is investment opportunity, there's money to be made and growth to be funded. So let's aim for that, and we'll see how we can do that. So I'm going to pause there unless any other reflections from you, Suzanne and Susan, for parting comments. If you can do that, that'll be great. One word or keywords on what you think is most important to take this to the next level.
I think what would be critical financing in small and medium enterprises that are very much working closely with the community. So, how do we attract these investments to coastal communities, small-scale fishers, which really make up the majority of fishers in the region? And is the blue bond the right vehicle for this? So I think that's really important. It's a huge gap for that level of financing.
Thank you.
And thanks, Susan. And from my perspective, I'm going to go on the other end of the spectrum and talk about the big issues and getting some of those big building blocks and cornerstone issues out there are going to start to help to build the market. And along with that, getting the standards and the criteria in a way that markets can trust the transparency of the sustainability of the bond use.
Thank you. We're just a minute over time, and I'm being told we need to make time for the other sessions. So thank you, everyone. Thanks to the tech team to support us and ADB for making this happen. If there's any pending questions with the ADB and tech team, we're happy to do offline responses for the Q&A if that's possible. If not, thank you all, and great insights and inputs. Thank you.
Thank you, Karthik. Thank you.